Hey guys, how are you? About time for a crypto update, and you with the Market Sniper. That's right. We are taking you through the crypto and Bitcoin in specific. So we'll have a little look at how he's been doing. First of all, this is the big mistake newbies make. And I've been doing for our content, our amazing new content that we're recording for our program and courses. I'm doing covering common mistakes. One of the key common mistakes that folk make, particularly new folk, is they get sucked into the tunnel of the short time frame, into their typical time frame, 15 minutes, half an hour, 5 minutes, 1 minute, 1 hour, 4 hours. They forget to go up to the big time frames. Big time frames is direction. Big time frames is direction. So whilst I've far from traded perfectly this recent period, it has generally been net positively contributing to me to a fairly reasonable degree, I would say. And in terms of the community, most of what we've done is look to be short. I did a YouTube, and at that point in the months we had stopped at this juncture here. And this was our last month. It wasn't so long ago. You'll see it in the preview. And I did a whole discussion about clear evidence of selling across the wicks here. The fact that there was such a give back at the 14 stroke 13.9, the fact that you had a shooting star and you followed it up with another shooting star at a relative high for what would probably become a relative high was our statement for crypto, and that you should in fact be bearish. This was not well received for a long time. In fact, we had a structure that you'll see that we argued would be to the downside. It was flat bottom grind lines. You'll see it when we drop the time frames. But the big time frames give you the direction. So many people say, well, technical analysis, it's about timing. And it's just for getting in the right time. Fundamentals are, the only thing that drive it. Technical analysis is fundamental analysis. The people with the best fundamental action are acting in the market, and they're leaving their footprints in the sand. And you are seeing not what they say, but what they're doing by looking at charts and understanding even basic. Now, this stuff that I'm doing on candlesticks, this is basic stuff. I cover this. We've got our beginner, we've got our intermediate and our advanced. I cover this in beginner. Literally, with beginner level training, you could, if providing you went up to your monthly charts, you could have stayed out of this market from a hodl long point of view, and you could have biased short on your trades. And you would have been making money whilst the others lose. And believe me, most are losing. The hodls are 100% losing, and many of the traders are losing. I would guesstimate 75 up to 90%. And insanely, Bitfinex long seem to have gone through the roof as we continue to sell off. We did highlight that this was a very high volume by price area. And I think we're going to visit into that and possibly even kiss the lowest point. We may even stick a wick through it, which is the low of this period, where we were also very bearish to everyone's disgust. I didn't know anyone else who was bearish during that period. Everyone was bottom calling. And the key element is they don't look at their big time frame charts. You should be biased short. However, within all of this, at some point I assess overall that this will end, because you remember we are on the symmetrical triangle scenario cast, which could be invalidated. It's our highest probability in our minds, but the market is a feedback mechanism. It's going to tell me, hey, Francis, you're just not on there. You're wrong about that. We're going lower. But overall, we think we're going to be here, and I've said countless times before that you're in and around the 5K to the 6K low. That is 6.6K low, where this was your 20, this was your 3.2, and that is just sub 14. That's our overall structure setup. And then I said we're going to get another echo bull, only not as strong as the last echo bull, and certainly not as strong as the original moon ascending. The futures backed crowd are coming. How many people, I got so sick and tired, that thought that the futures coming and the back coming was good for us? I get so frustrated. It's the control structure all over again, man. It's never going to be good for you when the derivative boys show up for the cartel. It's never good for you. Oh, institutions getting involved. Those are the same prostitute, vile, toxic institutions that are poisoning, getting bailouts, ripping you off, tipping the casino table up like this so that all the chips end up at their side of the table, putting you on the wrong side of a goddamn compound interest equation and scrimping you out and getting bailed out by government when they buy them lavish lunches and wines. How the hell did people think that futures was going to be good for them? By the way, they all came in the run up to here, and boy have they tamed Bitcoin so far. Anyway, assuming we're still not too far off with this scenario that I've drawn up top here, the symmetrical triangle scenario, at some point, and we were a bit tenuous about the selling here, at some point you could suddenly have a failed pattern and you could have a rally. So I'm going to give you my idea of where the target of our last HVF has pointed to, but you have to bear in mind at some point a pattern fails to the downside and you may get turned, and on this scenario we're getting to that zone. We think, you know, from when you entered here, and I can draw some straight lines instead of such bent ones, but from when you entered into the zone you start to get a probability potential. So if we draw that, we are entered that zone, and then the low point roughly here in and around 5.7s, if I can recall correctly, is the bottom end of that, and we had it in around we called it the hard ceiling, the soft ceiling. Those who've been following my channel will know how much we spoke about this when we were during this period of this particular structure, and we spoke about it a great deal, and we referred to it as the soft ceiling and the hard ceiling. Well, we're getting back into there now. Overall, I suspect that we'll probably still, according to our symmetrical triangle super macro ideology or scenario cast, base out here. However, there is still the bare possibility that we're too bullish. I always get called the pessimist, unfollowed by for being a perpetual pessimist. The difference is retail traders have bull bias, and there's everything is a bull, and they only want to hear things that make them feel comfortable. The best thing you listen to is someone who says exactly what you don't want to hear. You want that guy in the room. You want that guy in the room, otherwise you're just a comfort seeker. You want your security blanket. You know, you're a baby. Go home. If you want to be challenged, and you want to grow and you want to learn, you want to be prepared to hear something you don't want to hear. Even if they're wrong, proven wrong later, keep them in your circle. They test your paradigm. One of the other biggest mistakes while I'm recording this stuff, by the way, you guys want to talk about trading and come on board, book below. The details are all there. Have a chat. Real traders, not salesmen, real traders trading HVF method. I'm doing the new content on major mistakes. And I can tell you, apart from what I was discussing early, one of the biggest danger signs is conviction. Conviction. People feel conviction. When you absolutely can't see it doing something else other than what you envisage, and you think you're about to play your Ferrari trade, you are in a state of conviction. And it is a lack of trader maturity, and you will do it many times, and I have done it many times, so I'm no better than anybody else, but I do it less often. Why? Because I've changed my language on balance of probabilities. I have a probability and a scenario cost. I've designed an entire method to combat things like conviction, to combat things like not going onto your super macro and doing basic beginner in my first module of my new content that you'll pick up for, you know, sub 4K on a self-study basis, and you'll be able to learn this and do this and not be one of the guys hodling into 3 candles like that. Not be the guy looking for the longs into all of that. And it frustrates me because there's so much bad information going on out there. And, you know, apart from a minor, could Ethereum be positive in my own thinking mind, we've been at BTC dominant. We've highlighted the dominance. The big moves will be led by the God market. You heard it here first. No one else uses that phrase. The goddamn God market, man. And I'm not a maximalist. I don't, you know, technically I know other coins are faster and everything else. I'm just telling you what the price behavior tells you. I'm a price behavior probability based trader with patterns. So I can tell you for now, At some point, it may change, and it won't be Bitcoin. It could be Coin X that leads the market. All I can tell you right now is that liquidity matters, big scale, big market cap matters. If people decide they're getting into crypto, most of it goes into Bitcoin. Until that day changes, you've got to understand the highs will be, the new moves will often be led by Bitcoin. The direction will be led by Bitcoin. Doesn't matter how sexy altcoin number 46 in the coin market cap looks, it's going to go down long run. Yes, there have been a few stars, but they're all down. Binance is net down for the year. The most uppity of all the coins. I know there's some guys talking about Trezor, I think it is, that's burst its way into the top 10 recently. My guys sometimes asking about it, etc., etc. There's possibilities there. We're talking about number 10, Tezos. There we go. Trust me and my dyslexia to not even be able to say the name. Tezos. The game is getting the God market right. You get your God market right, then you can go play anywhere far and wide. But get your God market right. So here you go. You've sat here and you've looked at a monthly chart and listened to me speak for the better part of a number of minutes. And I've done that intentionally because I need you to understand that. Okay, so if we're wrong, by the way, and you've biased short, if we're wrong about our macro idea, and our macro idea, once again, the symmetrical triangle on the monthly chart for Bitcoin at your 20s, 14s, 3s, and 5 to 6.6. If we're wrong about this fella, what happens is you're biasing short because of your basics. And let's say it's absolutely spills through the floor. Oh, terror of terror, you make a whole bunch of extra money because you've been biasing short. The only concern I've had is we know about this zone. So I'm thinking there's going to be some degree of interaction when you get to the 5-7 and start approaching the 5-7. We have a target for you. So let's drop the time frame and take you off that. Got all preachy there. I should get a Bible out and start saying the Bible of HVF method and technical analysis as according to yours truly. But anyway, enough of that. Let's take you into the smaller time frames. Okay, so we'll go quickly through the weekly because you've seen the monthly and we spent quite a bit on that. And I think by now you understand largely what I say. Spend more time understanding trend and direction. Just spoke to my community. What are the things that you most get wrong? We're doing all the kind of, they say themselves sometimes they need to be reminded about trend and macro direction. And the game is, if you're trading with a trend and the macro direction, it's really simple. People think it's hard. It's really simple. It's hard to do, but it's simple to understand conceptually. And that's the important part. This right now actually has a degree of convexity to it. That's what I call convexity. Now that ain't bottoming out for a period like that was, only it was a fake bottom that then set up a continuation pattern. That was your final bottoming. That is potentially you can spill out of here like a monster. Again, my primary scenario I've already described, but there's a risk of that. And if you've been biasing short, you're going to make money. You're going to be making money. And just like here where we called short, and it was a tester because it was lengthy and long, lots of fake spikes. This has been the season, and this is another thing that we're saying. Bitcoin spikes right now should nearly always be shorted. Wait for them to top out and to start showing a bit of a wick on a medium-sized time frame, not on your 1 minute. And next thing you know, boom, boom, bosh, they will be going down and they will fizzle. And they do 100% fizzles. Look at that shooting star. Again, your basic candles, relative high, extreme move, and then convexity. And we called that short as well. And that makes us bears because everyone else is bull most of the time. Actually, we're not. We know a point when we need to be bullish. And one was over there. But because you don't see the charts, you don't invert your charts, you don't turn them upside down and have a look and say, hang on. Another key error that trader newbies make is they fail to understand the principle that you are looking at a chart and you have bull bias. You need to invert your charts. If you want to be a buyer both sides around, then you have bull bias. If you think one's pretty decent and the other one's awesome, both on the long side, when you invert your chart, you've got a problem on your hands. I mean, I grew up reading about the guys and thinking, and with paper charts at points. I even had a period where I had paper charts. I had a DOS PC that used to do dial-up at 33.6K a second. And I had 2 color moving averages, which I now no longer use, and otherwise a white line on a black screen. Long before Windows, before I had Windows. And, you know, you guys have got it all laid on here. You just go and you hit inverted. People had to stand on tables and turn their charts that they drew on paper upside down to have the benefit of asking the question, how do I feel about this chart now? Look how easy it is for you today. Use it. Use it. It's been given to you too easily. Use it. Okay. So preachy evening, indeed. Okay, so you're getting your ear whacked and your forehead bashed, but it's all good for you, and I want you to win. It's because of frustration and wanting retail guys to win. The little people in the game. Why do they need to be crushed? The better they learn and the faster they learn. So this was the big decision that had to be made. And as a result, we made it. We didn't even find it easy, but it should have been a lot easier in hindsight. I'm not going to tell you anything we've done, we've always found easy. Sometimes we've hummed and hawed and we've ifed and buttered and maybe'd and looked at all the facts and then eventually done the right thing. But it doesn't matter how you get there. And by the way, we don't only do the right thing either. We're getting tons of things wrong. But this was the big decision that, again, many people couldn't see their way forward to. And that was this. And we have specific rules. Overperformance is possible. First structure in the new trend. 6,800 to be run. 6,800 was run. New structure, smaller one. The patterns get smaller as you get deeper into the trend. That usually means you're tapering down. You're tapering down to win, but it'll give you a boost. Where's that target? In and around the 5.9 level. Let me just flash the eye for you and give you as close as damn it for that number. 5852. 5852. Guess where that line is? 5852, guys. 5852 coming out of this pattern is a possible target. That doesn't mean every time you get a possible target that it's definitely meeting that target. We're roughly there. So I'll draw with my pen. No, I hadn't gone in draw mode. Let's grab him back. Yeah, go away. Yeah. 5852. 5852. If you could draw a straight line, maybe I'll do it better with this tool. Let's try one more time. 5852. Here she comes. Yeah, that's probably a bit high, but you get the feeling. What's significant about this? Well, I showed you the 5.7 was the low one of the previous high volume by price. If you recall that. And we can go back out and show you volume by price. People don't know how to use volume by price. They don't know what a gift it is and how it shows you stuff, but they don't know how to use it. I'm seeing countless examples of badly used volume by price. So I'm going to take you up to the day and I will remind you of how since the bear market started, where your big volume has accumulated. And it's on your volume by price that I will be showing you here. So let's do that. So I've chosen 2 days. You can use any time. How you carve up markets and time frames is your business as long as you get to the analysis you need. You'll learn all about how to use volume by price properly in a number of different situations when you come and do a program. It's called volume profile. Go with the fixed range. We're going to select here. In this case, we use it a lot more reasoning as to how and why, but I'm going to show you right here. If we do this baby, you will see. And I don't actually want to get the bull market. I want to, and this is also Coinbase. Remember, it's not an exchange. It's more an onboarding. I'm going to grab that and I'm going to take it just until this juncture here. So since the bottoming out and the beginning of the new run. So from your bear market, the bottoming out and the beginning of the new run. The dark blue and yellow areas is the 70% of trade. 70% of trade happened in this bear, since the peak high, right the way through to your bull market. 70% happened in there. and the highest, most significant occurred in the lower side of our funnel, which gave us a little primer on that setup right damn well there. And that line goes all the way through there, and it's what you'll probably just run. And that gray line that's below it is the low point that you met there on that. And it was also a low point there, so it's a very significant period. That is the gray line, that is our target. That's what we've been looking at. You can see the slight squeeze in the wedge, and we're going to possibly visit the low side, maybe dip out the bottom of the wedge. That's your volume by price. That's significant. That is by far, okay, there was a lot of basing out here on Coinbase, by the way. On other platforms, this is actually right up here, and this one here is a lot shorter. So bear that in mind. It's more extreme on the exchange platforms. Remember, the exchanges are the people trading in and out. Coinbase, a bit more of an onboarding function. So go have a look at it and prove it for yourself. Go do the volume by price exactly as I've done it, up until the confirmed run of this hard ceiling 7,000 point, and see where all the trade occurred. Now it's coming back down to this level. This is a key point. That is why, if that runs with high momentum, we're in deep trouble in the crypto market. Our most bullish scenario is probably out the window. I have to warn you, you're back at the 23.6% of the original moon. You made it to the 61.8, but this is now one heck of a pullback. It's one heck of a pullback. So if we do a little bit of Fibonacci work for you, you're back below the 23.6 of the original run-up from here to the all-time high to the bear low, which also were 2 points, much like these points, all coinciding as well. Over there, over there, over there, and this entire level, which is why I think it may play a role. If you slow down and base out here, you could be close to a low. Reversal trading, though, is dangerous. Remember, we're continuation guys, so we could expect that to fail. But if that fails, it's very dull, and it's a very gray day for Bitcoin. The other pet peeve that I've had throughout all of this, the other real pet peeve I've had throughout all of this, has got to do with the likes of, and I'm going to take a sidebar, we'll come back to Bitcoin. I'm going to do an altcoin commentary. The amount of times we've said and reiterated that the altcoin market never got out of the bear market. Nothing they did established a bull again. Nothing they did established a bull again. They went roughly 20% up, and then they fell back down. In other words, they had a rally in a bear market. They didn't do a round trip. I want to show you this on Ethereum. I tweeted it out. That is Ethereum. That's Ethereum's high right the way down to its low. It didn't get out the 23.6%, guys. That is a rally, not a bull market. A rally is an upward move in an existing bear market. You could trade low through that low. We've said it a number of times before in our premium community. I assess that there's something happened. That is very convex price behavior. It is not looking good. You could double bottom on it, or you could fall through it. It could run everyone just in and short them. They could all go short, and that'll be when it bounces. Which brings me to another key point. I suspect that the gold and the Bitcoin markets will turn approximately around the same time, and I am expecting one more down move for the precious metal market. Go watch the Market Sniper. If you haven't subbed, guys, sub the Market Sniper, sub the Crypto Sniper, hit the bell, get your alerts, don't wait. If there's important stuff to tell you, you've got a Christmas coming, you've got your goals that you've got to get right for the new year. How are you going to take it forward? We were discussing the 3 categories you've got to invest in. You've got to do slow dough. You've got to do medium hot trading with moderate leverage. You've got to do it in gold. You've got to do it in the stuff you control structure shares, because they're the things that are going up when they print money. And you've got to do it in crypto, and you've got to have 3 levels of hot. You've got to have cold, 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 1:1 Coinbase onboarding hodl that you just get in and out of when the major bear and bulls. We're out. We've been out of investment for a while. We've been out in double digits. We're out. Now it's at 6K. The guys that ran it up to 14K are sitting in 6K, have lost 55, 60% again because they don't know basic charting. Anyway, there's too much to tell you. Most of the stuff and the detail goes on in premium, and that's where you need to go and learn. But sub for the channel. Do it now. Anyway, so there's more exciting stuff to tell you. So Ethereum and the alt largely never had a bull run. You might have to exclude one or two like Binance and clearly Tezos, but generally you are across the board. Alts have been absolutely diabolical. The dominance has been the theme, and you should have caught the Bitcoin echo bull, and there may be, if we're accurate, another smaller one to come. Smaller doesn't mean bad. Look, this thing went, guys, from 3.2 to 14,000. Hello, 11,000 move. You would have been tipped long by us already at the 4.344 level, and then you would have stayed net long, and you would have got out with about 11,000 after all this bouncing around and the volatility expansion. So you run it from 4.5 to 11K, you've got 6K to work. You could probably make 2K, 2.5K, which in these relatively flattening out times would probably be very welcome. Trading leverage long, moderate leverage, if we get that that bottoming out and that next up leg. However, as I've already said, if we go with momentum through these levels, there's trouble. There's trouble in crypto land. There is real trouble in crypto land, because this makes us very, very flat bottomed. As I've already said, you're in the blood room, the basement where all the slaughtering happens. That's why it's red. You know, this is where the movie Saw gets made. You know, it's carnage in there. It's corpses and carnages and snuff movies that go on there. You've got to stay the hell out of there. It's a nasty flipping place. Bitcoin is wanting to dive into the pig guts and bile, and that's not a good place of that move in terms of the Fibonacci color. So that's where we're at. A little bit of falling wedge potential, so that hopefully that squeeze will bring a little bit of bounce, but at the end of the day I'm going to trade what I see. The bias is still bearish. It's been really tough though to stay bearish as we're approaching this level. I'm not going to tell you what we do is always felt easy. It's a lot of, you earn your money through emotional discomfort and analysis, and you cure your discomfort and your mental cognizance and dissonance with analysis and community. That's how you do it. That's why, as I say, if you're going into the new year, you need to think about whether you're going to be making money out of this game or whether you're just here to donate money to people like us and one or two others. And as I say, we don't only win. I'm not trying to sound like we're ace. We aren't. We get it wholly wrong. But you will give your money away if you don't get organized and get method. So that's Bitcoin. I'll show you on a smaller time frame a little bit about the structure and what happened. In fact, cash was even better. This thing was hard for us because this initially happened on light volume. It happened on light volume, this down move. But we had it as a grind. I actually got really lucky. I had the best entry of them all. We traded and we saw a very sick little upside HVF that gave a target there. I put a limit sell order and I got filled on those wicks. You don't know how close that is to our stop for what happened. I didn't execute brilliantly the whole way thereafter. I felt nervous by the spike. We were concerned about the falling wedge and the light volume. So, a fair amount of money was taken off only for further movement, and then you're not making the same money. But we always play defense. What worked really well, cash was just great. Bitcoin Cash, BAB, it didn't have this as an initial break. It was cleaner, and you can see it. I'll even give you a guidance on where the target is for it, but it's long, it's well on its way. I'll give you the bid for next take on it, and you can have a feel for how all of these were showing up. This is just sick as a canary. Now, the good part about this sell-off, if I give you a quick flash of that, is that you never got the break on this down leg over here. It didn't break. It only broke there later, and that then gave you, and it squeezed across the top before it eventually triggered. That is a great entry. It was in some ways a better setup than Bitcoin, and because I'm Bitcoin dominant, I think the alts are higher beta. They will go lower further. You can have situations where Bitcoin doesn't make its target, but the alts do, because they're just spilling harder. It has happened once or twice. In other words, it starts to get a bid Bitcoin and it backs off, and then you see it. So that target on Bitcoin Cash is 176. There you go. Now you know 176 that we've got at 183, but you could have been short with a super tight stop at 208, and you could have been short in the 200s. It's not to be sneezed at. It's not to be sneezed at. Technically, the method is there, and you can trade it. And there are guys talking and sharing charts in our community all the time. Okay. Wow. Done quite a bit of ranting at you tonight. Sorry for that. Hopefully it's interesting. I want you to be better. I'm covering common errors, and I want to everybody who comes to learn HVF method, you still make mistakes, you still have a journey, you still have to reprogram your brain. Deep-seated psychological change is tough, actually. There's certain things, conceptual misunderstandings can be corrected quickly. Only if you're sharing what you do and you're in a community of well-willed people that want to help you. I mean, if you've got a conceptual misunderstanding and you're sitting alone in your cave trading and you're not sharing or showing a chart or ever having a discussion and you have no mentors, well, you're never going to know you've got a conceptual misunderstanding. Here, we pick them up and we can fix that. That's why it is. That's the theory. That's the rule. Where you have bigger problems is the emotionality of the trading. That's the impatience. It's the compulsion to trade, leaning on a trade too soon, leaning too hard, money management, fear and greed, fear of loss, fear of missing out, fear of being wrong. It doesn't matter about being wrong. We're regularly wrong. Sometimes we've been wrong, flipped and made money. Make money, worry about being right or wrong. Talk less about your trades to other people. Don't don't have ego investments with your views. It doesn't matter. People don't care about your views. Just win and make cash. The minute you're ego invested, you'll start to feel good, bad. You'll hang on for longer, hope a little bit longer because you told your wife, your uncle, and so over the barbecue. So that's what's going down in crypto. Potentially more downside. We're going to test the low ends of the key ranges of Bitcoin. That was the floor. The 5.7s through to the 6Ks. Those are going to be tested, and I said I'd go back via Bitcoin one more time, so we will do it. We'll go via Finex. Those Finex longs, they have gone absolutely bonkers, and many times the Finex longs have gone bonkers at just the wrong time, and sometimes they've been at high points at the virtual lows, and then they've started to reduce and the market actually comes back. I can't make it out, if I'm being entirely honest, of what's going in there. You can go check the Finex longs chart for yourself. This is already a long clip, but there is potential for further downside. But remember, you can have a return move. You can have a return move to your funnels, and this is slow breaks. It's not the extreme breaks. I do assess that at some point, maybe not too far away, once again, our primary scenario cost, there will be some basing. And it could be brutal. You could get a snapback rally. You could have a pattern failure here on Bitcoin, for example. It still could happen, despite the targets we've given you in and around those 5.8s. It could still happen suddenly. But I think that precious metals are going to roll over one more time, and that's not going to be in a good environment. And you might be asking me, but Francis, what have precious metals and mining in the ground got to do with Bitcoin? Nothing. It works like this, guys. They're both anti-fiats. They're not related. But the thing in the middle is the fiat system. The repos are coming out of the system again. They're doing repos and QE forever, only they don't have to declare it anymore, and it's at their 100% discretion, and they're not making too much of a fuss about it, and they're not calling it QE this time, but basically it means printing money and providing liquidity to all the toxic banks that should have been closed, broken, bust, destroyed, broken up, a whole bunch of guys jailed, etc., that never happened. But anyway, forget that. You have the fiat system here, and you have the anti-fiats. You might have gold, so let's go XAU. You might have silver, which is XAG, and others that are precious. And then you have totally other side of the fiat, but also an anti-fiat. You have crypto and Bitcoin. That's how they've been positioned. We've done analysis on this, looking at which one's gone first, when, and how they've moved in tandem. When the fiat system looks wobbly, which is generally the dollar, and they're going back to QE, remember, they were supposed to be reducing balance sheet and cutting rates. We called bullshit on that countless times, and we said they're going to do a U-turn, and then we said we're going to go into recession. I still say we're hitting a recession. You've come out of the yield curve inversion, and the recession hits not during, it happens after they return the yield curve back to normal. It follows. So yes, recession, be smart. You've got to think about how you employ your money. So it's dollar, it's also euro and the others, but the dominant currency of the world is the dollar, and these are anti-fiats. These are the anti-fiats. So they're not going up together because they're friends and they're holding hands. They're going up because he's going down. If he's going down, they go up together. So you can see that they are actually getting the same impulse of fear. When money gets out of fiat systems, a large part may run into there. Not a large part, because the gold and silver is actually small relative to the bond market and all the other crappy investments in the stock markets. But a certain amount will go in there, and then an even smaller amount, because we're a smaller market cap, will go in there. But when they get the fear about fiats, you'll get surges in there and surges in there, and they will often coincide because people are jumping off a ship. When they jump off a ship, they jump into a different boat that isn't sinking. And these are different dinghies that are sitting here, and you've got the Fiat Titanic here, right here, and there's these other boats. So people jump and swim and climb into one of these because they still have oarsmen, and they still have a hull that doesn't have a hole in it. That's what's happening. So I'm not saying they're similar, but you can see the impulses, and you sometimes see it sooner in the traditional markets because the institutional guys that fear fiat may move into gold and silver or euro or other assets, safety assets like utility shares, first before they run into crypto. Crypto is still a different realm for the big generation. Anyway, lots of talk, lots of detail. I want you to learn, I want you to grow, but the truth is you need to learn, you need method on your side, you need mindset, and you still will need a year to develop the maturity as a trader to be successful, because old habits, wanting to FOMO in, wanting to chase a spike, it takes time to break that tendency, that psychological tendency. And as a result, you need a community and time and continual correction. It's like trying to learn how to dance. The hip just doesn't move in the right direction along with the hands and the legs, and then suddenly you get the groove, and then you never get it wrong again. Okay, that's it. We'll talk to you later and more. Thanks for checking in. Go register, go subscribe, watch the free view if you don't know the mini series, if you don't already know. Book a call if you want to move forward. This is 2020. Big stuff going down. It's important to be trained and wise. Learn while the markets are quiet. Learn while the markets are quiet in many areas like the crypto, so that you are strong and trained for the key moments. Excellent. Bye guys, and thanks for watching. And for those of you that don't watch another one this year, Merry Christmas. Thanks for watching, or whatever faith you are in. Thanks for being supportive. Look forward to taking you into the new year. I will be at Acapulco for those of you. Book from our link on the Twitter profile. Thanks guys. Cheers.